Well, it's good to be with you today. This is Buddy Crum, Dr. Buddy Crum. I'm glad to be here with Don Wells again. Always like to be with you, Don. Let's talk about investing. Yeah. Help me invest, right? That's what
Help
we
me
need.
Invest. Helpmeinvest.com. And for those that are listening, that's one of the things that we've put together as a tool, a resource to help investors that are looking for some guidance. As always, we remind people we're not selling products. We don't have something to sell you. We're trying to help you get your money working for you, because one of the things that as you begin to invest and you see things grow, you'll begin to understand how powerful compound interest is and how it can aid in helping you to build wealth. Usually when we're talking about newer investors or getting started, one of the things, really understanding the risk of a portfolio. Risk is measured by something they call CAPM and beta. And you want the beta, the lower the risk. And so you monitor that through a few equations and things in a portfolio. We want the risk out of the portfolio because though risk and return have a relationship, it's not a pure relationship, as we say. It's not, well, if I take more risk, I'll automatically get return. There's actually a threshold that you can take a lot of risk and get a lot more return. And so you're trying to find that maybe we call sweet spot where you have efficiency in your portfolio with there's going to be risk. There's nothing that the only thing we call risk-free, a risk-free investment is government treasury bills, which do not pay very much. They try to outpace inflation, so they're good for that. But they're not going to give you the greatest return. But there's really no such thing as risk-free when you're going after returns. But you've got to find that balance that you're not just getting so far into risk that you can destroy your return.
Well, if you've explained, I've heard you explain many times there, even where you're in like government index funds or government T-bills and so forth, you still have the risk of inflation.
Yeah.
And the Federal Reserve keeps telling us there is no apprehension or fear of inflation, but I'm beginning to see gas prices go up.
Yeah.
It takes more to fill up my car. I see grocery prices going up, and certainly construction cost has gone up so rapidly. I was reading yesterday about the pallets because of all of the e-commerce, that there's so much shipping now that the pallets have gone. They used to be $9, went to $12, and now they're approaching $15, and this is within a year.
Wow.
So you go from $9 to $15. Well, you have to have some stocks or in the index would help protect against that inflation because they're built to go up when the economy goes up.
Well, there's so many things when you talk about risk that most people are not aware of. We have what's called event risk, market risk, reinvestment risk. There's a variety of different things that we have to pay attention to when we're doing a risk analysis, because these tools are required to know how to take that out of the portfolio. And it's systemic risk and unsystemic. Some of it you can control, some of it you can't. You cannot control somebody that flies a plane into a building, such as 9/11. We didn't know, we didn't see that. That wasn't in the portfolio that said, hey, this is probably going to happen. So some of that you can't get out of it, but some of it you can. And that's what diversification does. It takes some of that risk that we can control out of it. It takes some of it by creating a model in the portfolio that is diversified across sectors, across capitalization, across the U.S. market, the international. So by doing all of that, you create and buying into it, and that's where it's amazing to me how the level of sophistication in the markets and what we've had has come down to a place now where by buying into an index, that's what we're getting a lot of, and so it's exciting times. It's opportunity for people that. I don't have $1 million. I can't go to a broker, but I can invest. Or again, mutual funds, which can be a little bit high price. Now I can buy right into the market with these.
Well, Don, it's been good to just talk to you about index funds and to learn things, and I hope this has been very productive time for the people that have such a heart to see people gain wealth through good investing, solid investing. And tell us again, help me invest.
HelpMeInvest.com. We hope you'll come visit. You can make an appointment there for a 30-minute Zoom. We'll spend some time with you. Not selling you anything, but trying to help you invest and find the right place to invest. Or if you've got some investments, we can give you some direction on the best way to make sure that you're being efficient with your portfolio and what you're doing.
Well, it's been good to be with you on Market Moment, and we'll look forward to another time when Don and I will be able to just talk to you about how to build wealth. God bless.